For years, the real estate industry has considered cash offers as king. Cash offers typically allow for a faster, more streamlined transaction with fewer contingencies, meaning typically less things could go wrong, which makes it both a stronger offer in the buyer and the seller's mind. The benefit of a cash offer is that it removes the financing contingency. This means that the offer is not contingent or subject to a mortgage loan approval. It also means the appraisal is not necessary. Since both of these contingencies are removed from the contract, transactions typically close much faster, sometimes as quick as 1 to 2 weeks. For many sellers, this is very appealing. It also removes 2 hurdles that buyers must overcome, and it reduces the uncertainty that, number 1, will the buyer actually be approved for the loan, and number 2, will the house actually appraise for the purchase price? Because of this, lower priced cash offers would oftentimes beat out other offers with financing contingencies. However, in a strong seller's market like what we've been seeing in the past 2 to 3 years, lower cash offers didn't always beat out financed offers. Many buyers were making offers well over asking price and including strong pre-approvals and proof of funds along with their offers. The economy had been very strong, consumer confidence was high, and cash was not necessarily king. Then enter COVID-19, whose true impact is yet to be seen. But for many, we're already starting to feel the impact on the economy, employment, real estate, schools. Life as we knew it just a month ago has definitely changed. Will it change back? No one really knows, but I'll tell you this much. Cash is definitely back to being king. The financing industry has been turned on its head. Banks, lenders, mortgage brokers are all having to adapt to the new reality. Bank statement loans are a thing of the past. Different lenders have different overlays or guidelines and rules that they have to adhere to. New restrictions are being put in place, and banks are taking a more conservative approach and deciding who they're going to loan their money to. They're being much more cautious. Because of this, lending will be more restricted. Government-backed financing such as FHA and VA loans will become more restricted and will likely require a higher credit score. Credit scores have always been an important factor, but now there will be even more significant. Another process that lenders are putting into place is verification of employment checks. Typically, these have been done 7 to 10 days before closing, but the lender would contact the borrower's employer and confirm and verify that they're currently employed with the company. Now we are seeing these verifications done at the closing table. Should the borrower lose their job that day, be furloughed, or subject to a pay cut, the lender has the ability to deny their mortgage loan and cancel the closing. With all that said, I'm curious, if you had a property to sell, would you accept a lower price cash offer or a higher price financing offer? I'd love to hear from you. Reply or comment at your convenience. The bottom line is there's so many moving pieces when purchasing and selling a home. Whether financing or not, it's important to understand the entire process and have a real estate agent who will consult with you throughout the process. My team and I are always here for you, and we're happy to answer any questions you may have. Stay healthy, stay safe, and God bless America.